Right. Good morning, everyone. We would like to welcome you to our webinar about investing into fintech. And today we're specializing our webinar for women investors. As women investors, we sometimes approach things differently or have other considerations. So today we're focusing specifically on women and their experiences. The cases you will hear today are also experienced women investors. So we're looking forward to sharing our experiences with you. General information about the session of today is that we're going to record it and upload it to YouTube. So anyone who has missed it or anyone you want to pass it on to can still watch it. We have a chat room, so if you have questions, please add them to the chat room. And there will also be a Q&A at the end, so you can also ask your questions live. But the chat room is also available. And there's also a form in the chat room because we're curious who you are, what you think about, and what extra information you might need from us in the future. So please, if you have time, fill in the form. This is the program that we're going to follow today. First part is me, which I'm going to keep shorter so that the speakers that we have today have more time, because that's what we're all interested in. The first speaker will be Robert, who will tell us about what fintech is exactly and what are the perks, so why you should invest in it. Then we will go to two case studies by two experienced investors. Tatjana and Annegien will share their experiences with us and hopefully give us some tips and tricks how, if we want to invest into fintech, we should go about it. After that, we will tell you a little more about the tools that we have developed in Fine, which are also geared towards helping you to enter the fintech market for investments. And after that, we will go to a Q&A and some final remarks. So please give us all your input, questions, etc. in the Q&A or in the chat during our talk, whenever you want to. Right, so that was me. I will shortly tell you a little bit about Fine, but the tools, etc. we will present after the cases. So Fine is the short version of the abbreviation of Fintech, Investor Network and Ecosystem. And we want to build stronger connections locally, but also internationally between the different parts of the EU. Sorry, that's my dog. And our goal is to encourage investors. Sorry, I'm just gonna, no, anyway. Gonna close the door, I'll be right back. Sorry, as you can hear, I'm well protected. And our goal is to encourage investors to collaborate together. And to do this, we want to connect experienced investors to new investors. Our overall aim is to increase the access to capital and investment in less connected fintech environments, ecosystems. So we want to connect the experienced ecosystems to the less connected ones. Here shortly you can see our objectives. We want to increase access to capital and investment, like I just said, especially for the less connected fintech ecosystems. We want to increase the access of investors to the flow of local deals. And we want to improve the accessibility of knowledge about the investments between investors. Our other objective is to enhance the network connectivity and the cooperation within the fintech innovation systems within different countries of Europe. And last but not least, we want to facilitate the inclusiveness and the gender equality. That's why today we are focusing on women investors who, of course, are just as experienced as the men investors, but like I said, they might have different considerations or different approaches to investment opportunities. And we will also look at less, let's say, groups that we find less in the investor ecosystems, for example, people from some countries that invest less, because we want to make it equal for the whole of Europe. Right, so that's my part. And of course, now my dogs are shut up. Excuses for the dogs. So I will now give the word to Robert, who will tell us what fintech is and why you should invest in it.
Thank you, Georgie. Greetings, everyone, and thank you, like Georgie said, for joining today's session. My name's Robert McConnell, and I'm a project manager with the Fintech Corridor in Ireland. I'm also a serial entrepreneur and investor and have experience of fundraising, scaling, exiting, and investing in a number of businesses and sectors, including fintech. As we explore the innovative landscape of fintech, we're not just talking about the future, we're actually stepping into it. I'm sure you'll all be aware, but fintech is really reshaping the fabric of traditional financial services, making them more efficient, inclusive, and user-friendly. Today, we'll look at fintech as more than a textbook subject and see its impact on everyday banking, investing, financial management, etc. But even if you're not an investor, or even if at the end you don't invest in fintech, each of you today is already part of fintech and its transformative effect on banking, finance, and technology, whether as consumers, business owners, investors, or industry observers. And as I get through very quickly, I'd encourage everyone to think about how the integration of technology and finance can benefit not just individual users, but also the broader economic landscape. So I'll move on. So what is fintech, and why should you invest into it? Financial technology, or fintech, is more than just a buzzword. It's a revolution. It's the integration of technology into offerings by financial services companies to improve the use and delivery, to improve their use and delivery to consumers. It spans from mobile banking to insurance tech to cryptocurrency to blockchain technology and many more subsectors. But just to get it out there, why invest in fintech? Well, for starters, the European fintech scene is absolutely booming. In 2023, the European fintech sector witnessed a substantial increase in investment, 37% increase of investment, soaring to over 24 billion euros. This trend is driven by an increase in demand for digital services, surge in technological adoption amongst traditional institutions, and a very supportive regulatory environment across the whole of the EU. According to EY and their Global FinTech Adoption Index, as of 2022, the adoption rate of fintech services in Europe has reached 64%, which is well above the global average, as we might expect. But investing in fintech not only taps into direct financial profits, but also promotes financial inclusion and literacy. Promotes an opportunity to bridge gaps in traditional banking, especially in underserved and unbanked regions. The European Commission has praised fintech as a sector for its role in creating a more competitive and inclusive financial environment. Just to put it out there for anyone who is coming to fintech for the first time, or who thinks they're coming to fintech for the first time, you're probably not, because we're all familiar with many of these businesses who either are 100% or loosely connected to fintech and technology. So, some examples: Klarna, Revolut, N26 are reshaping how we think about money management and transactions. A name we'll all be familiar with, Klarna from Sweden, for instance, simplifies e-commerce payment systems last year to over 60 million consumers and 130,000 merchants globally. Revolut, a UK-based company, has expanded its services to include cryptocurrency and peer-to-peer payments, illustrating the diverse capabilities of fintech beyond just traditional banking. And N26 from Germany has successfully demonstrated how a fully digital bank can operate without physical branches, yet provide user-friendly and efficient and secure banking services. These companies and the rest on the screen, and many, many more, exemplify the potential of fintech to not just innovate, but fundamentally alter the financial landscape across Europe. They show the future of finance is here. It's digital, inclusive, and borderless. From the slide, as I've said, you can see a range of businesses that you'll likely be very familiar with. All of these businesses grew through the impact of investment. Some took a little capital and a lot of time. Others took more capital, less time, and over several rounds. but all are good examples of fintech and subsector businesses. But why would you want to invest in fintech? Well, hopefully you're seeing my screen. You can see the headlines that we've drawn out: the rapid growth, high demand, highly profitable, very innovative, and very strict regulations. There's a compelling case for investing in fintech stems from its significant growth potential and capacity to disrupt traditional financial services. According to the European Central Bank, fintech startups have an edge because they leverage technology as a core utility rather than just an auxiliary service. In 2023, we've explained about the fintech investment across Europe, but in 2023, investment into fintech accounted for nearly 20%. European fintech investment accounted for nearly 20% of all global fintech funding, signaling strong investor confidence in the region. Fintech solutions offer streamlined processes, reduced overheads, and thus can be higher profits. Also, an enhanced customer experience, which translates into further cost savings and higher profitability. A report by the European Central Bank estimated that fintech innovations in digital payments have reduced costs for consumers by approximately 30% across the EU. Touching my last point on strict regulations, the regulatory advancements in the EU, such as PSD2 and GDPR, have created a safer investor environment by standardizing practices and enhancing consumer protections. For example, since the introduction of PSD2 and the open banking framework, over 300 new fintech services have launched in Europe, focusing on improved consumer rights and security. Fintech scalability means that these businesses can expand internationally with minimum physical infrastructure. This ability allows them to enter new markets more easily compared to traditional banks, which often face significant logistical challenges. As an investor, these factors not only promise lucrative returns, but also the chance to be part of a larger movement towards sustainable and inclusive financial services. Investing in fintech is investing in the future of finance. But what are the key characteristics of fintech and the fintech market? Understanding the landscape of fintech involves appreciating its key characteristics. Really can be summed up as innovation, scalability, and regulatory compliance. The European fintech market is particularly notable, as I touched on the last slide, for its rigorous regulatory frameworks, which provide a structured and safe environment for investors. For an insight into this ecosystem, please check out our fine website. There'll be details later in the presentation, as Georgie mentioned, but the ecosystem mapping is really excellent. It provides a really good idea of the regulatory framework and the supports available for fintechs across the European area. Significant investment in AI, blockchain, and cybersecurity within fintech signal a shift towards more secure and resilient financial services. These technologies are critical in fighting fraud and ensuring privacy, aligning with European values and data protection. But the European investment landscape, fintech investment landscape, is also very diverse. 2023 fintech ventures in Europe range from blockchain-based startups in Estonia to digital-only banks in Spain to payments technology in Germany, reflecting the wide array of opportunities available to investor. As we'll touch on and promote, investor networking and syndication is a really great way to begin investing in fintech and discover new opportunities. Research from the market data forecast indicates that the European fintech market is expected to grow from 55 billion in 2023 to over 80 billion euros by 2028, driven by advancements in digital payments and blockchain technology. So while it is a very challenging regulatory framework, it is very important technology that can often require a lot of cost to launch. The rewards are there for investors who want to invest in a very fast-growing sector. To seasoned investors, this slide could relate to any sector, and that's because investment in fintech, while it's multifaceted and it encompasses everything from equity investment in early stage startups to engaging in venture capital and private equity for more mature businesses, it really follows the same investment profile as any other investment. Generally, the investment process is the same. So as a potential new investor, you should be well informed on the market, the scale-ups seeking investment. Use good decision-making tools and processes like you would for any other sector. And as a investor or as someone who's involved in investment syndication, definitely promote building and nurturing a good portfolio of these options. And of course, be willing to exit at the right time for you and your business. For example, equity investments in fintech, like any sector, involves dealing with dilution. And as a potentially new investor altogether or a new investor in fintech, rapidly growing fintech companies can often need to seek subsequent funding rounds. Understanding the terms of investment, such as the founders' agreements, employee stock options, vesting schedules, is crucial before you would take on the investment. Like I've mentioned already, a great way to mitigate it is through syndication or investor partnering. Perhaps take a junior role alongside a senior investor who might set the term sheet for everyone who's getting on board. Also, valuation techniques in fintech can be different. They're fairly sophisticated and often reflect the potential for rapid scale and market penetration. Methods like discounted cash flow or comparative company analysis are commonly used, but are often adapted to account for the high growth environment in fintech. I suppose lastly, when we think about exit strategies like in any sector should be considered, whether through an IPO, acquisition, or secondary sale. It's just making sure that the exit aligns with your financial goals or your group's financial goals and market conditions. Like investing in any sector, it's really keep an eye on market trends, potential buyers, public market conditions, so as you can time your exit as a founder or investor. So hopefully those quickly ran through slides explain why fintech's attractive, what is fintech, and the steps you should take to consider getting involved in investing in fintech, educating yourself about the market and fintech, and then the process of investing. And I will very happily pass back to Georgie. Thank you.
All right, Robert, thank you very much for this overview, helicopter view, I should say, because it's a lot of information. It's also a complex market, but as you said, fintech is everywhere and we use it every day, but it has very specific qualities. So after fintech, as I told you, the purpose of FINE is to connect ecosystems internationally, which brings a set of additional challenges. So I would now like to give the word to Madalena, who will tell us a little bit more about these cross-border challenges and what you should take into consideration or what are extra issues when you look at cross-border investments in this sector. Madalena, please go ahead. And and start with introducing yourself, of course, a little.
Thank you very much, Georgie. And I would love to see the ladies here interested in fintech investment, but maybe with another occasion. So I'm Madalena from the Romanian Fintech Association, also part of the FINE project. I'm here to present you, let's say, in simple terms, how it feels like and some tips and tricks when you decide to invest in startups and companies that are not from your country. If you decide to invest in a company in Romania or Bulgaria or Hungary or France or whatever, and this is basically not your native country. In our association, we count around 40 smaller, bigger, several sizes, and from the experience on working with these startups, we saw the difficulties and both difficulties and opportunities when it comes to investment that comes from another countries to our Romanian startups here. Okay, so basically I will try to briefly present to you 3 ideas that we discussed several times with the founders in our countries, what they see. I mean, both the founders and the investors. What's crucial when it comes to invest in a company from another country. And obviously, as my colleagues presented before, fintech sector or this vertical, it's highly regulated. And besides this, the financial sector, it's a complex one. That's why we consider that the founding team and the founders, it's mandatory for them to either worked previously in a fintech startup that succeed, or maybe they are former bankers, or maybe they work in some other financial fields previously. In addition to this, we would say that the reputation of the founder, if it's just let's say one founder, or the team of the founders, their reputation, like in the financial ecosystem in that country, and this, I mean, how they worked and collaborate previously with the commercial banks in that country, with the regulatory bodies. Maybe you might have an assessment prior to the decision of investing in such a company. I put here some very specific examples. One, it's let's say probably known by everybody in the financial or fintech world, Nikolai Storonsky, which is the CEO of Revolut. Basically, he worked many times previously at JP Morgan. And I wanted to highlight a company that comes from our country, Romania, which is Pago, which is one of the most successful fintech companies in Romania. Basically, the founder initially worked in a bank that is the market leader here in Romania at this point. So let's say the starting point for these founders were quite solid for them to succeed in their next journey in setting up a fintech company. As Robert and Georgie said, the fintech industry is highly regulated, and the second tip, let's say from our side, it's to assess how dependent this company is on the regulatory aspects and the regulation itself. Also, one more thing to assess is that this company needs to be authorized by a regulatory body, even if it's the central bank of that country or the financial supervision authority of that country. It depends a lot, obviously, on the type of the company. As Robert said previously, there are several on payments and transfers, insurtech, and basically each sub-vertical, it's regulated by different authorities. And this is something that you need to understand and know. On the European legislation, it says that if a party owns more than 10% of a company, it's considered significant shareholder. And if you decide to invest in a fintech company that is highly regulated by the regulatory bodies in that country, for example, the central bank of that country might ask to a due diligence to the investor that is owning more than 10% of the company, because basically that investors let's say have something to say on the next steps and the strategy and the growth of that company. Maybe Anne and Tanya afterwards might tell us if they encounter such such situation in their investing stories. Okay, and the last and not least, I would say that from my point of view, this is the most important one, the market position of that company and the relationship this company has with the established players. When I said established players, I said like commercial banks, in that country, card schemes like Visa, MasterCard, even though fintech sounds very cool and I don't know, it seems that it's all pink and flowers between fintechs and banks. There is a saying and also a term called frenemies, and in this fintech world, the relationship between fintechs and banks, it's a bit sensitive, let's say. And coming back, when deciding to invest in a fintech company, you should really understand how this company position itself from the commercial banks, card schemes, the payment processors that are in that country, and also their relationships with other fintech companies. Here I put a very small example from Romania. Thinkware is an open banking solution set it up in Romania, and for instance, what they try to do in order for them to succeed or be alive on the market, let's say, starting with a strategic partnership with Banca Transilvania, which is basically the market leader in Romania as a commercial bank, and also with the National Bank of Romania. Thinkware is an authorized open banking solution. Plus, in addition to this, when setting up the company, they have investments from Raiffeisen Bank International, and basically this was their strategy to resist and be on the market until now. I think this is all from me, like three basic examples on what to look when deciding to invest in a company. Basically, the founders, the regulatory aspects, and how the company is regulated in that country, and the market position and the relationship that company has with the other players in the market. That's all. I give the mic to Georgie and introduce the ladies after me. Thank you.
Yeah. Thank you very much, Madalena. I think you highlighted very well the aspects that a cross-border investor does not have the local knowledge about. And that's one of the reasons why the Fintech project is set up, to connect investors internationally to other investors who do have that knowledge. If you look in the chat, you can see that Carolina has put up the investor map that we have developed in the FINE project. And you are all more than welcome to visit it, where you can find other experienced investors in other countries to connect to if you are considering a cross-border fintech investment. Right, then we move on to our first case study. I would like to welcome Tatjana, who is a partner in South Central Ventures, and she can tell us more about her experience in fintech investment and tips and tricks that she may have for us, do's and don'ts. Tatjana, welcome, and I gladly give you the floor.
Thank you. Nice to be with you. Thanks for inviting me. Yeah, as Georgie said, I'm a managing partner at South Central Ventures. I'm based in Slovenia. Our fund is actually active in the area of Western Balkans, including Slovenia and Croatia. So we do quite a few, let's say, cross-border investments, because we actually have an investment region that actually covers two countries that are within EU and also some countries that are not yet EU members. So I've been dealing with venture investing for over 15 years. I was one of the co-founders of the first Slovenian VC fund that was primarily active, but that was back in 2008. We were primarily active in Slovenia and Croatia. And then that was a first-time fund with first-time investors, so that was quite an interesting learning experience at the time. Then in 2015, we actually set up a new fund as a South Central Ventures that's active in the area that I mentioned before. And also we have some experienced institutional investors, including EIF, EBRD, and similar, and IFC. So we are generalist funds, so we are not specialized in fintech investments, but we do also have fintech investments. And in addition to that, we do invest in companies that are developing technology for agriculture, for education, even marketplaces, some enterprise software and the like. So it would be difficult for us because we are a reasonably small team with 10 people. It would be pretty much impossible for us to have all of the knowledge about all the areas we're investing in within our team. So that's why our network is extremely important. So Madalina was mentioning some networking is an important part, or having a network of, let's say, expert advisors or something to help out on this in these areas as a very important thing. And on the other hand, also a network of potential co-investors that you can co-invest in certain areas where they might have more experience, which actually means that we're sort of, let's say, to an extent mitigating the risks, or at least make them less severe. So we engage this advisors on an as-needed basis, and I'll maybe say a bit more about it as we go. So for me personally, investing in fintech is not substantially different from investing in other types of startups, although there are some specifics. As I'm not sure I mentioned, but like we are early stage investors, so VC in general is pretty early stage, but we are specifically early. We do also seed investments. And unlike with mature companies, with companies in this stage, you have little track record or history to lean on when you make an investment decisions. So the things we rely on actually is assessing the team, the product or service they are offering, and of course the market they are active in. And that means like the market in the sense of geography, but even more so the specifics of a certain industry or sector they're active in and trends in this industry. It's even a cliche maybe, but like when we say when you're assessing an investment, the team is the one that's most important. So we do pay quite a lot of attention to how the teams are composed, what previous experience is, what their domain knowledge is. And also one thing that Madalina mentioned, integrity is a very important part of these checks. And so background checks, integrity, and especially in fintech, I think this is crucial. I mean, it's not like in the other industries, it's not that important, but it's for sure, fintech is probably one of the most important things. So typically you're dealing with open-minded individuals, but they do have their strong visions, and usually they're not very willing to actually change these kind of attitudes that they have. So what I look for example, when assessing an investment is also how coachable or how willing to adapt these people are. This is a thing that's actually bordering psychology probably more than some other things, but it is important for the team, especially in the early stage, to be able to respond to feedback they get from the market or maybe from other experts, or being willing to listen and maybe address other risks that maybe they don't see. So that's one of the important aspects that we look at. And then when it comes to the product, of course, we need to understand whether the problem this product is addressing is big enough, because to paraphrase it, you know, for every solution you can find a problem, and the challenge is, or the question is, how big this problem is and how much scaling it actually allows. So if there's a need big enough to actually allow the company to grow with the product that they have. And then the other important part is on how much investment is actually needed in order to make this product, you know, a successful business opportunity. So this is again what we look for, and we usually consult people from the industry specifics to get the commercial view, let's say, on how certain product is addressing, how well it's addressing the market need. And then the other part that we do is, of course, also do the technical due diligence, which is usually maybe somewhat even easier in a way, because the tech aspect, we usually have a lot of experts to look into that. And then, of course, the third thing is the market, where I think the fintech is probably the most specific, as we said. So we're looking at how big this market might be, what the trends are, what are the existing competitors, what's the barrier to entry, and how defensible whatever position that company can build can actually be in a mid to long term. So the other thing that we also touched upon before is the regulation. So obviously fintech is extremely regulated industry. And it is, that doesn't mean, of course, that there's no opportunities. Quite the opposite, the opportunity is there, but you have to be aware of all the, let's say, licenses, certifications, whatever permits are required for a business to actually be able to operate in any of the markets. And that actually is also related on how scalable the company can be, because even within the EU, which is a single market, there's still, as also Daniel was mentioning, also Robert, there's still local authorities need to give you the permissions, you need to be authorized by them. So this, of course, takes usually a lot of time, and also a lot of, in a lot of cases, also requires substantial funds to be sort of tied into these processes for a certain period of time. So before making an investment, we definitely do carefully examine any requirements that are needed for this kind of company to take off. And then, of course, we're dealing with innovative solutions where there are always alternatives to some existing solutions. These markets are actually new markets that are emerging. And typically in the beginning, these things are not so regulated. Just think of maybe crypto assets, because crypto world was something new. So there was initially there was a bit of a Wild West, as I would call it. But of course, everyone's fighting for its position, and there's little regulation. But as it is, of course, in most cases expected that at some point some kind of regulation is being imposed. So that's one of the aspects that also need to be considered carefully. So what is the likelihood of new regulation being imposed, and what that means actually for development of a certain company? Usually, of course, the regulation is not introduced overnight. It takes a few years, but that has a strong impact on, even if not on the performance of the company itself initially, but it does have a strong impact on the potential appetite of acquirers, because you want to exit at a certain point, and if there's likelihood that there will be some regulation that would be limiting your ability to exit or attractiveness of a company to an acquirer, that of course has a substantial impact on your potential returns. And then if I maybe just touch upon like the two particular fintech investments that I wanted to talk about. So one was a monetization platform. To simplify it, maybe it was a paywall that was specialized in video content. And the company is actually offering a subscription management, like simple implementation of pay-as-you-go transaction-based model. and at the same time was able to provide a lot of insights into the audiences and full of invaluable data to its clients, and its strength was like very strong. It was very strong on identity management, which is actually the crucial part of the pay-as-you-go models. So the investment, as we did it, actually the positives or the strengths that we saw in it was partially the team, which had a very strong technical background, no previous banking experience, I would say, but they did have a co-founder that was with previous experience in scaling businesses in media and entertainment industry, which is maybe a different angle because the media and entertainment companies were their primary client as video content providers. So we saw as attractive, let's say, element in this investment. It was focused on video, which is gaining in traction and in importance. At the same time, there was increasing trend in monetization of digital content, so more and more digital content was getting charged for, and the models were going from the purely ad-based, where you have advertisements that actually pay for the content, going more and more towards subscriptions and pay-as-you-go models. And the other thing which was also attractive here was that there was no particular licenses required. So there's a big concern on the cybersecurity part and the general the product build-up, but no specific licenses because the payment processing actually was done through integrations. So the integrations and the security were important parts, but there were no specific other regulatory requirements. So the company actually could provide its services and get the clients quite quickly. On the other hand, of course, there were a few negatives as well. As I said, we didn't have any, we had experienced engineering team, but no actually member was specifically versed in products that would deal with, that would be like a fintech products before. So as the company grew, so initially that wasn't such a problem, but as the company started growing and scaling, we needed to bring in other people that were more experienced, like CTOs, so chief product officers, which is not a unique thing. You usually do that when you have a scaling company. The other part was that when scaling, when we had like this larger scale events, the technology proved to be not as stable as we expected it to be. So they had a few instances where the like really big events were not 100% supported as they should be. So this was, there we had like some technology issues, but still manageable, which was not too bad. So there were small hitches, not a big problems, fortunately. And the other thing, the third thing that I would mention as a problem is that they had a slightly too loose pricing and business model definitions. So they actually were too servant to their customers, trying to adapt too much. And that actually led to a bit chaotic, I would say, management of the business on their end, which was partially addressed, I would say, through the acquisition, which came in late 2022, when the company was actually acquired by a leading end-to-end video platform to sort of enhance their monetization capabilities. So there we actually got to sort of address some of the issues that the company was having as it scaled by making it a part of a bigger organization that actually had some of these things sorted out. And the other example is maybe a company that is more regionally focused, because the previous one was very global. but the other one is more regionally focused. It's BNPL, so buy now, pay later kind of company. So it's not a novelty. It was not a novelty on a global level, but it's sort of introducing the service like Affirm or even Klarna or Afterpay in the markets that were not covered by these larger or existing players. Their primary advantages in efficient credit checks that are done in minutes, and actually their challenge then is to just make sure that the default rates of the customers are as low as possible. So in this case, we had, as a positive, I would mention a strong team with a visionary founder and two former bank executives, so it's also two largest Slovenian banks that had a lot of experience in the banking world and also the network in the area. The other positive thing was when this was introduced, the banking regulation was also changing, so limiting banks from providing some kind of this fast loans, or at least making it more complex and more expensive for them to do so. So this kind of financing was actually something that banks were not covering, but what there was a need in the market, and even the banks were interested in partnering with them. So that's also one of the things Madalina was mentioning. So just making sure that, or checking what the relationship with the existing incumbents, let's say, is in the market, and how they can either help the company to grow or threaten it. So the negative part on this investment is actually the required, it requires substantial investment into expanding to new markets, because each new market needs this local or like on a national level licensing, and they need to sort of obtain the permissions or the certificates from the local authorities. Typically it's national bank, I think in most cases it is. It also requires a lot of cooperation with funding partners in each market. They have not managed so far to find somebody that would actually be helping them in this respect throughout the region they're covering. So they have to deal with it on case-by-case basis or market-by-market basis, so to speak. So let's say the entry into the market is more complex and more difficult, but then once they're there, it usually sort of enables them to grow quite fast. So this company is still actually in our portfolio, so for now looking good, but I don't have any nice exit stories from this one yet. And yeah, I think that's what I wanted to say.
All right, thank you very much, Tatjana. That's very interesting and sounds very challenging to me, because it requires a lot of expertise that you don't, like you said, you don't necessarily have in your own organization, especially if the regulation is not on point yet. So it sounds very brave to me, I must say, to do this investment. Are there any questions for Tatjana at the moment? You can always ask questions later in the Q&A, but I see there's a question here that Joel would like the company names of the two case studies, if possible.
Yeah, one is called Impler, the other one is called Limpay.
All right, so that's for Joel. We always have time for questions later, but I think you gave a very intriguing insight in the difficulties when you want to decide if you invest in fintech or not, but also the positives, right? Because there are also definitely some positives you mentioned. So thank you very much for that. Then I would like to give the floor to Annegien. Annegien has a lot of experience in advising companies, and you call yourself a catalyst investor, which is, of course, always an intriguing title for me. So It's great that you're here with us. Thank you very much. And I would like to give you the floor.
Thank you. Yeah, it might be good if the case study 1 changes into case study 2. I'm actually for 30 years an investor, and I've been a tech investor now for 10 years. And I come from the financial industry. So I probably classify as the typical women fintech investor, because it's a specialized weird field, which means that it's high risk. You need to understand the sector. You need to have your contacts. So what I've been seeing is that the women that are in this sector are all coming from the financial industry. So that's my tip 1. If you are not from the financial industry, hook up with the right women in fintech, because otherwise it's a very complicated sector. Why is it also complicated? Because the valuations are about 3 times higher than in all the other sectors. So the amounts that are involved are higher. The regulations are higher. So it's one of the most difficult industries to invest in. And I'm saying this after having invested in fintech, but I'm all over. And since a year, I changed to only investing in catalytic impact. So it's not catalytic, but catalytic impact, which means impact at world scale. Because I think we are destroying the planet in a rapid pace. So if we don't start healing and repairing today, there won't be nothing left to heal and repair. So since a year, I'm only the new startups I invest in are catalytic impact. But I have my portfolio of companies, and there are some really nice fintech companies in there. But I've also seen fintech companies disappear. So I'm giving you this because I think if you're not in the network, it's going to be very difficult to find the right startups. But what is even more important, to find the right co-investors. Because there's another thing which makes it difficult for women. If you look at all the startups in fintech, you will see that the ones that succeeded, the unicorns or the bigger ones, are only male. So they have been started by male founders. They are people that normally come from the trading, the cash management. They have big pockets of money. They have friends with big pockets of money. And that is one of, I would say, it's the most closed field in all the innovation that we have. So if you're not connected to them or part of that group, it's going to be very difficult to be part of that, of the names that we have been seeing, all the success stories. So that's my caveat. Now, if you still say, yeah, but I want to be part of that, then probably a very good way of doing it is hooking up with the right accelerators. So I'm part of the Startup Bootcamp, let's say Tribe. I've been a couple of years now as a mentor in their fintech program. I'm part of the SBC Bolt, so I go to the demo days. And then you already get to see the fintech companies that match the profiles, because it was great, Madalena and Tatjana, that what you already discussed, because now that you know what you should be looking for, that's where they will actually present themselves after they come out of a 4-month program, right? And there's fintech accelerators all over the place. So if you become a mentor or an investor with them, it would give you a good opportunity to scout. So that's one. And then you have your criteria that they should meet. Now, the other thing is, and I also liked, you mentioned not, I would always say peers or friendly competitors, but you didn't mention, you said frenemies. Well, I've seen the frenemies. And the frenemies are the, and that's something to really watch, they are the corporates that are partners with those accelerators. You would think, great, because those would be the banks and insurance companies that really want to work with those startups. Don't be sure. They might actually be looking for innovation. but be really careful. And when you work with them, check out what companies they already have in their portfolio, because you might discover they have actually already in their portfolio competition. And maybe they don't know, because maybe it's the head of innovation or somebody from cash management that loves to deal with startups, and they actually don't realize that somebody else in the bank has in their portfolio a potential competitor. But once they start really looking into it, and then your startup is thinking, this is going to be my big launching customer, they then realize it, and then nothing happens, and the deal falls through. So this is something to be really careful for. So yeah, I would talk about two cases. Well, I have two cases. One is a US company that came to the Netherlands, joined the program. The holding is in the US, but they also set up a Dutch company. And they started as a B2B SaaS, then discovered it was far too difficult to work with any of the banks or any of the parties, because banks don't really, because they're new, they're not from the old network, they don't have their system. So then they pivoted to business to consumer. That's really difficult. I always think consumers want it but don't want to pay for it. So if you don't find the enterprise that will pay, so your B2C is the end consumer, but your paying customer normally is going to be the B2B. And they actually managed to do a pivot again. And now they have the banks in the US. Because that's another thing. The banks in the US, the whole system is far less about privacy. Whereas Europe, privacy is like key and very difficult. So there you need to be connected to the right parties. In the US, the banking system, I would say, is behind. They're very old, traditional. But in working with consumer information, they are much more lenient. So, and then they have these large service providers that a startup can hook up to. So it's a very different market if you're just looking at Europe or if you're looking at a global company. And then I invested in a fintech, which was inclusive fintech in Colombia. And I think that's a great idea. They found a way with the Z-score. I come from credits originally, and that's how you score if people are credit worthy. Now in Colombia, at the end of the month, most people can't buy food for the last week. And they found a way how this could be solved, working with the retail plus a kind of a credit card. I think they were too visionary. So what were my learnings there? Never invest in a country when you don't have a local partner. So I would not invest in Colombia anymore if there would not be a serial angel with experience or an angel club or a local VC, because otherwise it's going to be, the cultural differences are so different that I can come with my Dutch and European and US mindset. But in Colombia, it's going to work very differently. And that's the same in Africa. So with my Catalyst Impact Investment Club, I would not invest in a Europe startup anymore because there's nothing, they can make a lot of money, but it's not catalytic impact. In Africa or Latin America, I might in the future, not now, but maybe in a year's time, but I would only do that with local partners. So I would say those are my learnings as a fintech investor. And I do think we need many more women in this space because women invest 4 times more in impact than men. So I think we can make the industry much more inclusive if we collectively start to invest more in inclusive fintech, which is not only cash management, but it might be more about education. It might be about asset management. It might be more about micro financing because it's not about the numbers, but it's about the movement. So that's from my side.
All right, thank you so much, Annegien. I think you've touched upon a lot of aspects that we're trying to solve in the FINE project. That's why we have the Investors Network, which Caroline has put on the chat. And we're also having an ecosystem network where you can learn more about the local ecosystem. Of course, we're now containing ourselves to Europe, but we also already see large differences between different ecosystems in Eastern Europe and Western Europe. But yeah, we got that feedback from a lot of parties that the co-investors that you have local contacts who know the markets and who know the market players is actually crucial. So I think that's what you also mentioned. Now we have a little time for questions for Annegien and also for Tatjana. One question that came for you, Tatjana, still is, someone was interested, what percentage of your investment goes to equity of fintechs? And are they all startups? So that was a question for you.
Yeah, is my mic working okay now?
Yeah.
Yeah, okay. So we do invest only in startups because we are early stage fund, so all of these companies are startups. And the majority of the investments is equity. So sometimes we combine direct equity and some convertible notes, but these are typically converted. So I would say like 90% of it is going towards equity.
All right, thank you so much. Any other questions for Tatjana or questions for Annegien? I have about 100 questions, but I would, of course, like to know if there are any other questions except mine. Don't be shy. You don't have to type it. You can also ask it live if you want to. I think for now everybody's still contemplating. I was interested. Here's one. Greta is asking, based on your experience, what is the time frame to receive the investments from fintech? Do you mean the buyout, Greta? Do you mean what time is to exit again? Is that what you mean? We can also hear you live if you want to give us more clarification about what you exactly mean with your question. Oh, you can't turn on your microphone. Okay, yes, so she means if you enter an investment, what is the time frame before you exit, generally?
Well, that depends.
Annegien, could you elaborate?
Yeah, I think that depends. Probably for Tatjana, it will be less years than for me because I already invest earlier. So probably we'll give it to Tatjana and then add 2 to 2.5 years for the phase that I'm investing. And that's why I normally would love to get out by the time there is a Series B, because otherwise I can't reinvest my money because then it's locked up. And as a business angel, you want it to be freed up so that you can reinvest it. That's actually one of the other major problems of the European ecosystem, that all the VCs only want to invest in growth of the company. But they only want to invest when the company has 50 or 100 MRR. And they first need to get there. And it's the business angels that do that. So if we don't get our money back, we can't reinvest.
Yeah, I think we're pretty much in the same spot because we also invest in early stage. So we do start with seed investments or Series A. But it is a problem actually generally to exit towards secondary investors because majority of the investors that invest in growth stage have the sort of the policy of investing fresh capital and not really doing a lot of buyouts. Not until the companies are really profitable and, so that usually doesn't come until like series, whatever. So for us, I would say like 5 to 7 years is something that we would be looking for, but we'll see. It depends. Like if you start early, that of course takes time until the company is like mature enough to actually be able to, like with the one that I mentioned before, for us it was just over 5 years. The other one I think has already been in a portfolio for about, it's the 5th year. So we don't really see. We're now doing the Series B, so we don't see the exit yet. But yeah, I would say like somewhere 5 to 7 if we can go, if we can exit towards like mainly it's secondary investors or it is straight sale. Like they're usually companies wouldn't get to an IPO in that kind of time frame.
All right, thank you so much. That's actually a very interesting point you're raising, the difference between business angels and VCs. Would you say, Annegien, then that the business angels always go first, or do they sometimes go at the same time as a VC, or does it mean a lock-in, which you wouldn't like?
Well, normally the angels come in first, so they could be part of the friends, family, and fools first round. I'm normally not part of that. I'm coming in when I think, okay, they actually have a working product. They have a capable team, like a basic capable team. I used to invest also pre-seed, but I'm not doing that anymore. I want to see product market fit and paying customers. Doesn't need to be a huge amount, but at least some. Because if they can't sell yet, why would they be able to sell in 6 months? I would like them to already have raised one time, because also that people need to learn. So if they've done that, then, and it's still really early, I can tell you in the whole process, then the angels come in. There are some VCs that are early VCs, but normally you will see professional angel groups. They are the type of animal in between the solo angel and a VC. So they are like a group of angels investing together. And then the next round would normally be the early VC plus the angel group. And then it goes to the, let's say, the regular VCs that would like to invest when the company is actually maybe 15 to 20 people. They have 50 to 100 MRR. There's plenty of VCs. That early phase, like Tatjana is also one of them, there's not so many of them. And they act, I think, in essence, like the angel groups.
Yeah. Okay. Right. And I was really curious because you said you have switched to catalytic impact. So you then said you're not investing into fintech anymore, but there must also be fintechs.
And less inclusive and actually catalytic.
Yeah.
So I looked at the Dutch startup that they are bringing wealth management to women, because 90% of the women are kind of dyslexic about or alphabetic about wealth management. And I think they need to be independent, but it's for me too Dutch. It's not catalytic impact. It's not at global scale. So you have to choose where you put your money. But I think if you are a woman investor, and I think they can be a great company, then that could be a great investment. Because there's another thing of thinking about investing. It's about financial return, but for me, it's very much about where's your purpose? What do you want to achieve with your money? Because it's basically energy. And where do you want that energy to go? To another cash management solution, or to have more people have financial wealth and be able to manage their life? So the question is, what is your purpose of investing? Is it financial return only, or is it purpose and financial return, or financial return and purpose? Up to you.
Yeah. Choices.
Yeah.
I think we have to move on, right? There's probably a lot more. Well, anyway, a lot more questions, but I think I should now pass the floor to Natalia to tell us a little bit more about the fintech tools that we have developed. So we would then need the slide to be the main screen again, I think, so we can all see what Natalia is going to, sorry, I said Tatjana, but I meant Natalia is going to show us about defined tools. I think listening to Tatjana and Annegien's story, the tools are very suited to the issues that you have raised. But of course, I'm not objective because I was part of developing the tools. But anyway, so Natalia, please tell us some more.
Thank you, Georgie, and thank you everyone for being here. It's a pleasure to meet you and be participating here in this webinar. My name is Natalia Cardona, and I'm a project manager for F6S, and I'm also part of the FIND team. And I'm here today to present to you some of the project features. We will first put on a short video that we have created for the project. So if that's okay, well, we will be sharing that now, I think. Second.
Welcome to the future of fintech innovation. Today, we will embark on a journey through FIND, Fintech Investor Network and Ecosystem, an initiative funded by the European Commission under the European Innovation Ecosystems Work Programme of the Horizon Europe framework. The FIND approach is designed to create a dynamic co-investment environment, fueling innovation and supporting the growth of companies across European borders. Our main goal is to increase access to capital and investments in less connected innovation areas of Europe by building strong investment pipelines and screening methodologies to attract co-investment in fintech startups and scale-ups. Through FIND Matchmaking Network, powered by the F6S platform, you can forge connections with fellow investors in other European countries and explore a range of investments spanning various fintech sectors and growth stages. Dive one step further into the FIND experience and discover the Ambassadors Network, where seasoned investors and fintech experts play a pivotal role in fueling innovation and sharing valuable insights. Venture into our knowledge base, where beyond the curated courses, workshops, webinars, and specialized articles of the Investor Academy, this space opens to reveal the ecosystem and investors map. Navigate the ever-evolving landscape of market trends, policies, professionals, and institutions across 10 European countries. We believe that innovation knows no bounds, and we're on a mission to spark connections and opportunities across Europe. Are you ready to explore the vast world of fintech opportunities? Dive into the FIND project by visiting our website to stay up to date with the network.
Well, as you saw from our video, we have several developments that are undergoing for the FIND project. So if we can move on onto the next slide that we're sharing. I'm going to start talking about our first tool, which is the one that we've been working thoroughly on. And our goal here is to build a community around fintech in Europe and beyond, if possible. So for this purpose, we have created the FIND Matchmaking Network, which is based on the F6S platform, as you saw from the previous video. The idea of this kind of group is to bring together investors and local networks. And here we share insights and trends and relevant information that we as a consortium find very, very relevant to help build this approach and to help us create a dynamic environment that fosters collaboration and, of course, knowledge exchange among investors themselves and industry experts. Yes, if we can go to the next slide, you can see a preview of how the matchmaking network looks like. For this purpose, you have to go to the F6S platform and you can directly search for FIND Matchmaking Network, or you can just go to our website, fintechnetwork.eu, and under the Matchmaking Network tab that it's available there, you can be redirected to the F6S platform. Here we have an internal group. You will have to fill in as an investor some information that it's required to join this private group. And of course, we are actively trying to matchmake through our own consortium investors that we feel and that we see with this information provided that could be a good pair or group for specific investments. So I highly encourage everyone here to just check it out if it's interesting for you to become a member of our fine community. This is an opportunity that I feel women especially can benefit from. We have there also engaged ambassadors from our project. So if you would like to start discussions, there's an open forum where you can get the information that you need and the resources that you need. If we can go to the next slide, please. Thank you. Then for the other activities that we have, well, we aim to provide investment guidance with our project. So for this purpose, we have created the Fine Ambassador Network. So far, we have a group of 18 experts that are here to help us strengthen our network and provide insights to European investors or foreign investors. Here, the people that we chose are people that are very, very active in our own networks as a consortium, and that has the experience and the knowledge to kind of like be the beacons of knowledge from our project. You can engage with them through our online communication channels and also through the Fine website. And of course, we highly encourage our ambassadors to share their knowledge and experience with new and also experienced investors. If we can go to the next slide. If you want to become an ambassador, if you feel like you have enough knowledge or experience, or if you know someone that you might think could contribute to strengthening and growing this community of ambassadors that we have, please do not hesitate to go to our website again and submit your candidature. I'm sorry. Here we will be reviewing and we will get back to you. Another one of our goals is to empower investors in different sectors from different backgrounds. So for this purpose, we have the Fine Investor Academy, which is a resource hub that we will try to target stakeholders that we think could benefit a lot from the knowledge that we all have gathered as a consortium. So we will try to reach out to new people that are interested in fintech investment specifically, but also you can find their general knowledge on investment, young investors, women, and minorities. The goal for this hub is to provide this knowledge and foster inclusivity and equal opportunities for our whole community. We have also developed two of our main tools here that you can also find and navigate on our website, fintechnetwork.eu. First one is an ecosystem map, which it's a joint effort among our consortiums to provide an overview of the fintech landscape in our target European countries. We have here inputs of general trends and key players that you can easily find here in this mapping. And on the other hand, we also have an investors map, which lists the most relevant players in the countries that we're targeting. And this provides people that are new to this topic or that want to get into investment in fintech, a really great overview of what's going on across Europe and the most important companies that are leading this trend. And of course, you can search there by type of investment, and you can engage with them through our two maps. So I highly encourage people to visit our website and for you to check it out. In case you have any doubts or questions, we also have a tab on our site where you can reach out directly to the Fine team to in case you would like more detailed information, or in case that you would like to engage on a deeper level with the things that we have or the resources that we have on our network. That will be all on my side. I highly encourage all of you, if you want to stay tuned to our updates and the developments of our project, to follow us on LinkedIn. You can find us under Fine Fintech Investor Network and Ecosystem there. And you can access our website anytime. It's our main hub for contact. And of course, check out the matchmaking investor network that we have created on the F6S platform. Thank you all very much. I will leave also my contact on the chat, just in case you would like to more about Fine. And I will give the floor back to you, Georgie, and we can wrap up. Thank you.
Okay, thank you very much, Natalia. Yes, I think it's important to understand that, which you've already stressed, we're trying to build this network, but we can only build this network together. So, of course, new interested investors are great, are very welcome, but we also need the experienced investors, as Anna-Gien pointed out, which you should not do without, to join our network. Carolina has put the connection to the matching network on the chat. So I hope that all of you will join us in this network so that we can strengthen each other and increase the investment into fintech in Europe. We would also like to ask you to please look at the survey that we have put on the chat and fill it in. And then I'm going to give the floor to Gisela, our main partner of Finance Innovation, who will look at if there are any questions remaining, and who will give us the final remarks. Gisela, over to you.
Thank you, Georgie. And thank you. I just want to thank to each of the speakers that have brought a lot of insightful information today, and all the participants that are with us. As you know, I'm Gisela Sanchez, and I'm a project coordinator of the FINE project, and actually it's on the context of this project that we are doing this webinar. I just wanted to mention, because a lot of things have been said, our next milestone, the FINE project is going to be present during the Unchained Festival happening on the 19th and the 20th of June, Romania. So we will be having a workshop on co-investment. So if you want to know more, or if you are going to be around, please do not hesitate to participate to this major event on fintech. So we'll be happy to present more and let you know more about our project and what's going to happen in the next months. To me, that's it, Georgie. I don't know if there are any other questions, so just please keep in mind the information that has been shared on our website and on the chat. Everything is going to be recorded and available on the LinkedIn of Fine, and we also can share all the presentations with participants. So thank you, Georgie. Do you want to say add something else before we finalize?
Thank you, Gisela, and thank you very much to all the speakers. Thank you for everybody for joining us and listening, and please, we hope to see you back in our network, either as ambassador or as new investor. It doesn't matter. We want everybody to join us. Anna-Gien already had to leave us, so I will thank her later for her contribution. Tatiana, thank you for your very interesting story. And I hope we will find each other and make some beautiful fintech cross-border investments together. Thank you very much and have a nice day.
Thank you. Bye-bye.
Bye.
Thank you. Bye.